Welcome to another S&P 500 analysis. Today is August 27, 2022. The long-awaited speech from J Powell at Jackson Hole finally came, and his message was, do not expect the Fed to pivot. We will cause some pain to the economy and to everyone before we stop hiking rate, and there will not be a rate cut in 2013. So stop your wishful thinking. Now, those are my paraphrase on what Powell said in his brief speech today. Essentially what he said is, don't expect the Fed to stop hiking rate until they nip inflation in the butt, even though when they got that rate hike to a level that drove inflation down, they will hold that level for a while before they'd even consider cutting rate. So if you have missed that speech, I have put the link in the description below so you could go and listen to J Powell's speech. So does this mean we should dump a stock and look for a new low? In this video, we'll look at the sentiment, the market internals, and the price action of the S&P 500, along with other major market indexes, and see what the market is telling us what the S&P 500 might do. So stay tuned. Few announcement before I begin. If you'd like to see additional posts from me before my next weekly video, go to my Substack page. The link to my Substack page is smtraderCA.substack.com. You will find this link in the description below and also in this channel's About page. Also, I will post another video around Sunday evening where I will discuss the price level and price scenario for the new trading week for the SPY, QQQ, IWM, and a couple FANG stock like Apple and Tesla. And if you like the content in this video, be sure to click the thumbs up. You give it a like. This will help promote the video on YouTube. And if you have not subscribed to this channel, click the subscribe and the notification icon. So if you have any question or comment, please post them in the comment section below. Now let's begin. Look at the weekly chart of the S&P 500. As you can see from last week, it had a little bit over 145-point range, and it lost almost 171 points, or a little bit over 4%. It broke this one-time framing up and starting with a one-time framing down. It's still close above this rising 10-week moving average, but close below this declining 40-week moving average. So right now we are basically looking at a gap down, solid weekly bearish candle, and we essentially are looking for this thing to come down to see would it be able to put in a higher low. Remember last week we essentially were looking for this lower high and lower low until it broke this high, this pivot high here, because you see here's the high, here's a lower high, here's a low, and here's a lower low, lower high, lower low, and then we broke this and put in a higher high. So now we're basically looking for this thing to come down, maybe come down here and then start moving back up, then it will put in a higher low. Now, if it take out this June low, then all bets are off. But if it come down and put in a higher low, then we will watch to see would it be able to take out this high. And if it does, then it become a new uptrend, because now we got a higher high and a higher low. Now let's take a look at the sentiment chart here. Starting with the VIX, you see the VIX is starting to come up. Right now on Friday it closed at 25.56, so it is coming off of the 20 level that's been sitting for quite a while, and now it's moving up toward the 30 level. And the put-call ratio is also starting to climb back toward the 1 level. On Friday it closed at 0.9. So again, basically been sitting around 0.75 or below that 0.75 for a little while, and then it's just kind of doing a little pop and drop. Right now it seems like it's making another move back up, but this time it's accompanying with a increasing level of the fear index. So obviously the market participants are getting a little bit more fearful now. Now here looking at the up-down volume ratio after J Powell's speech on Friday, we saw the market sold off, and the up-down volume ratio was a little bit over 9-to-1 in favor of the down volume, and the advanced decline we are seeing over 2,300 more declining issue than advancing issue. So that's more like 80% of the traded stock in the New York Stock Exchange is basically decline in price on Friday. Now on Thursday, we did have a little bit of a rally into the speech here. And on Thursday, we saw the daily advance decline have 1,887 more advancing issue than declining issue. But the up-down volume ratio was a little bit over 5. It was 5.5 to 1 in favor of the up volume. So obviously, the market got spooked by J Powell's frank and straight message about the continuation of the rate hike and the Fed's commitment on fighting off inflation. And looking at the New York Stock Exchange new high versus new low, it's not much change, even though we had a big drop day on Friday. It was down over 141 points on the S&P 500. That's 3.3, almost 3.4%. But looking at the amount of issues making new low, which is 98 stock make new 52-week low and 26 make new 52-week high. So it's nothing compared to what we saw back in June. That this here is over 1,000 stock making new 52-week low. And this cumulative advanced decline line from the New York Stock Exchange, we see that it is a little bit, just above this pivot low, but also notice that the S&P 500 is actually making a little bit of a lower low compared to the prior low. So we are seeing a little bit of a positive divergence between the AD line versus the S&P 500 just on a short-term basis. You might ask, what does that mean? Well, it means that we could see a little bit of a reversal from the S&P 500 in the short term to correct this positive divergence. And here, looking at the Nasdaq, we see the Nasdaq 100 on Friday. It was down over 538 points and lost 4.1%. Notice that the up-down volume ratio finished off at 7.5 to 1 in favor of the down volume, and the advanced decline, there was almost 3,000 more there's almost 3,000 more declining issue than advancing issue. So definitely there was a broad market sell-off in the Nasdaq on Friday. But again, when you compare to what has transpired back in June, it is still above the June extreme. And also looking at the new 52-week high versus 52-week low, we saw on Friday had 171 stocks make new 52-week low versus 35 stock make new 52-week high. So again, it's nothing compared to back in June and also in May timeframe, where we saw over 1,000, more than 1,000 stock make a new 52-week low. And here's the Nasdaq cumulative AD line and the Nasdaq 100. Now, we did see a little bit of a positive divergence on the S&P 500 versus the New York Stock Exchange cumulative AD line. But for the Nasdaq, that's not the case, because you notice that the Nasdaq cumulative AD line did made a lower low, lower than this pivot low here. And the Nasdaq 100 also made a lower low compared to the recent pivot low. So there is no divergence between the Nasdaq cumulative AD line and the Nasdaq 100 index. So what this all means is that the market participant get a little bit more fearful now as the market readjusts based on the reality that they just heard from J Powell in the speech at Jackson Hole on Friday. So that's going through some adjustment. We again notice that although the internal is turned a little bit negative, but it is not at the extreme of the June timeframe where we saw the June low. So does that mean that the market will come down and take out the June low or testing the June low? Right now, it's still too early to say, but definitely the market internal and the fear factor have not come to the point that it's pointing to the possibility of taking out the June low. Now let's take a look at the price action of the S&P 500 on this daily chart here. First of all, from Friday's close, the S&P 500 is back down to 15.76 0.79% from the all-time high. So essentially lost 15.8% or so. You see this entire Friday, a solid candle, basically took out the expected range, lower range, and came down and took out this particular zone as well as a potential support zone, which is also this balance area. And we'll take a look at that on my video where I will discuss the price action on the SPY, and we'll take a look at these balance area from these prices over here. And right now, it seems like it is coming down. We could be looking at it to come down to this 4,000 level, which is this gap zone here for potential test of support there. So we'll see would it be able to hold this level and then get a little bit of a turnaround. Then that will give us that higher low. And then we'll be monitoring would it be able to come back up and take out this high to put in a higher high. But first thing first, we want to see where that low is going to be. This coming pivot low is going to be here, or is it going to be down here, or is it going to take out down at this June low here? So we'll have to wait and see. So for the downside scenario next week, essentially, I'm just looking for continuation of price downward here to this 4,000 area, this 3,900 area, to see would it be able to find support down in this area here. If it doesn't, I'll be looking for to continue to move down. There was a gap here between 3,815 area to this level here at 3,789. So, but on the upside, if it could get back above this 4,180, then we're essentially looking for this thing to come up to see would it be able to take out this pivot high here, which is 42.90, right? No, 43.25.28. I will put on the expected move upper range and the lower range in the trade watch video when I discuss the SPY, the QQQ, IWM, and Apple and Tesla. I will just do a quick update on the S&P 500 chart with these range on it, because right now I don't want to remove this. And if I put the new expected range in the zone, then be too cluttered. And here, looking at the daily chart of the Nasdaq 100, right now it's basically back in the bear market territory because it is down almost 25% from the all-time high. So again, you can see that it's quite bearish on Friday, and it lost, over close to 539 points, lost 4.1% just on Friday itself. So right now, we're essentially looking for to see what be able to find some support down here near this 12,260 and 12,130 area. Essentially, this gap zone, right? These pivot high, and here's the little bit of a pivot low here. This area for potential support. So we'll be watching to see would it be able to do that. And if it's not, then yeah, there's a good possibility it could go lower and possibly test that June low. I mean, anything is possible, right? Is it probable? Well, that's up for debate right now. So right now, I'm just still waiting to see what I'll be able to find support here first to get a pivot and then push us back up, then form a higher low. And again, just like the S&P 500, and we'll take a look at it to see what I'll be able to take out this high at 13,720 and put in a higher high. And we'll be talking about a potential new uptrend. Then we see what are the next upside potential. But for now, we're basically looking for this potential support area to get tested. But if it decides to swing back up, and look at this pivot high here for the next potential target area. Now you wonder why I do not have the weekly expected move and also the upper and lower range for the Nasdaq 100, because the option is not really highly traded. The option for the Nasdaq 100, it is very liquid for the QQQ, okay, the ETF for the Nasdaq 100. So I will have those expected move and the range that I calculate put on those charts, but not for the Nasdaq 100 because there's no liquidity on there, and when there's nothing actively traded, the spread kind of get little bit unbalanced. But the S&P 500 is very highly liquid and actively traded. That's why those number is valid. And here's the daily chart of the Russell 2000. Again, similarly to the Nasdaq 100, the reason why I did not have the expected move for the Russell 2000. So the right now it is down 22.75% from the all-time high. And also you can see that it was down on Friday 3.3% or just a little bit under 65 points. And once again, we're essentially looking for a little bit of a pullback and possibly get into this gap zone here somewhere around 1850 area and see what that hold. If it doesn't, then we're essentially looking at this gap zone here. It would be somewhere around 1770 area. Okay, so those are the downside, but if it comes up, then look for this pivot high, and that would be somewhere around 2030, and then possibly up at this zone area, up above this 2100 and close to 2134. And here's the Dow Jones Transportation. The Dow Jones Transportation, as we enter into the bear market territory on Friday, it closed, essentially it's lost a little bit over 21% compared to the from the all-time high. And on Friday, it lost almost 3.9%, 577 points. So it was a pretty bearish day for the transportation. Right now, we are looking for the transportation to continue to move down to this zone here and possibly retest this 14,000 level and see what it finds support and get a bounce back up. And if it decides to turn up, then watch this 15,000 level, essentially this trend line here, see what it be able to break this trend line and take out this high here at 15,300. And for the Dow Jones Industrial, it did not have a good day on Friday either. It lost just a little bit over 1,000 points, lost 1,008 points. So just a little bit over 3%. But it's still not in the bear market yet because it's only lost 12.68% from its all-time high. So again, we're essentially looking for to continue its pullback down to this 32,000 level here, essentially this gap zone, the gap fill zone here, to see what it'll be able to find support and get it pushed back up. And we're essentially looking for this pivot high to get taken out to put in a higher high if it could find support at 32,000 level and start bouncing back up. Otherwise, we'd be looking for the industrial to see what if be able to find support down here somewhere around this 31,000 level. And if it's not, then we're basically looking at the June low. But right now, key on this 32,000 level to see what be able to find some support at this 32,000 level and then push this back up. And here's a New York Stock Exchange composite. Now, although it's still lost, a little bit over 417 points or 2.67%, but when you compare to all the other market indexes, this is the best performer on Friday. Right? It only lost 2.67% versus all the other have lost greater than 3%. So right now, it is down 13% from its all-time high, and looking forward to come back down and test this double bottom pivot high here near the 15,000 level. Remember, we're basically looking for this thing to come back and test this level here. If it pulled back last week, we essentially saw that from the last week video, we talked about this point here that almost tagged the 100% major move. It did tag the first leg of the major move, 61.8. Now, other people basically looking at a major move of 80% because a lot of these major move thing is so widely monitored that you got people try to front run those things. So most of the time, you won't get 100%, or sometimes you get exceeded 100%. So the way that I play it, a lot of time, I basically play it anywhere between 70, 80%, and depend on the price structure as well. Right? So you are getting close to this resistance here, and if you were, well, you can't trade the New York Stock Exchange composite. I mean, if we are to trade it, then you might starting to take some profit once you start seeing that attack, somewhere up at the 80% level of the major move and then start pulling back, right? The least you could do is scale out or move your stop. So anyway, we're basically looking for the New York Stock Exchange to pull back to this 15,000 level to see what it be able to hold. And if it doesn't, then we're looking for it to come back down to this 14,800 and see what it holds there. Because again, we are still looking for a higher low from all these indexes, so we could see the possibility of reversing the the trend from January to June on that lower high, lower low downtrend. And for the upside, essentially just this major move up here, 16,000 level here on the upside. Now let's take a look at the 10-year yield. One of the interesting facts about the 10-year yield is, although we did expect it to come back up near the 3.5 level, continue to come up to 3.5 level, but notice on Friday, after J Powell's speech, the yield did not really shot up, right? So basically, the bond market is pretty much realized that the Fed is just going to continue to increase the rate to attack the inflation problem. It's just the equity market seems to have this fairy tale of wishful thinking that the Fed is going to pivot, that the Fed is going to cut rate in 2013 or the first half of 2013. So obviously the equity market was a little bit too unrealistically optimistic. So today with the reality, they basically have to catch up to what the bond market has been doing. Look at the US dollar. The US dollar finally came up and took out the this high here, which is 107.786. So today went up above 108. So right now we're basically looking for the dollar to continue to move up, possibly get up to this 112, and might even get up to this 114, 115 area in the near term. So we still continue to see the dollar to gain strength. And for the crude oil, we did see it bounce off a little bit off of this 50%. It came down, tried to back test this 85.75 once again, and it is creeping back up to close above the $90 level, and it closed at 93.06 on Friday. So we're going to see will it continue to push up and be able to get above this 94, essentially this 38.2. Because we're still looking for this thing to continue to push up to this 120 level and possibly get up to this 130. Now, for the silver, last week it did pull back a little bit. It seems like it is setting up a little bit of a bear flag here. And right now it's still holding up at this $18.75 level. So if it breaks this flag, then we expect to be looking at this thing to come down to this 1780 level, back testing this level here to see what it be able to hold it. So right now I'm basically looking at the possibility of support down here near this 1825 area, these lows here. And if it doesn't hold these support, I will not be surprised to see it come down to this 1780. And gold was having a little difficulty coming back up to this 1804 area. Remember, we were talking about seeing if gold be able to get back above the $1,804 level. If it could, then we're basically looking to see what it pushes higher up at this zone here at 1846. Right now, I'm basically looking for gold to possibly come back down and back test this 1716 area. So that's it for the index. And my observation from the market sentiment and also the market internal is, we basically have doing a little bit of a pullback right now, and probably the market might have overreacted based on J Powell's speech because they were a little bit too optimistic, and a lot of the market participants were expecting some sort of a Fed pivot in 2013. So the hawkish speech from J Powell last Friday really shook the market and got them to reprice to reality. So how bad is that repricing? Is it worth taking it down to the June low? Right now, I don't see that happening. I do see a little bit more downside push. Maybe come down to this below this 4,000. on the S&P, possibly get down to the 3,900, and then we probably get a bounce, and that next bounce will be critical to see whether be able to put in a higher high, or it's just a little bit of a bounce and put in a lower high. Then that will bring in a total different reassessment of where the market might be headed. But until then, we basically will be continue to monitor for the pullback to see will the market be able to put in a higher low. Then we start monitoring the next pivot high. So with that said, hopefully you find this video to be informative, and be sure to watch the Trade Watch video that I will put out this Sunday evening, and smash that thumbs up to help me promote this video. Thank you for watching and stay safe.